Hello? Hello? Is it working? Hello? Yeah. Hello, everybody. I invite you to sit down for our next panel. We will start our next segment now. Welcoming Ms. Rosana Costa. Okay, we will start our next segment now. It is great that there is so many to talk about. I know. Well, we will start thanking the previous panel. It was very enlightening. It was great to have Alfredo, Minister Marcel, Minister Pardo, Lucas Aranguena, and James Calloway speaking on green hydrogen. It was very clear on the opportunities for Chile and the challenges ahead. Quizás si lo hacemos en español. I have all the patience in the world. Ok, we will start now. O lo hacemos en español, así todos entienden que se tienen que sentar. O subamos los micrófonos. Increíble, estoy tan contento. Thank you, everybody. No, really, I think it's great that there is so many to talk about, that after every panel, this generates so many connections. That one common topic is, what are you doing in Chile Day? Why so many Chilean people have to go to England to do this? And the answer is this. After any panel, you can see all the connections that you generate, that if you have to ask for a meeting to do this, it might take over a month, over a quarter, to have all these conversations that you just had. So me and the board member of Invest are very happy that these connections happen. So there's no issue. Nonetheless, it was almost like school, like the teacher being here saying, sit down, sit down. So I was trying to avoid that. So very happy that it worked. Now, it is my personal honor to introduce our next distinguished speaker. She is the governor of the central bank, an institution that holds a unique and esteemed position as the safekeeper of Chile's economic stability. And listen to this, the guardian of its investment attractiveness. That's a really good title. The Central Bank of Chile has played a pivotal role in maintaining our nation's financial integrity and fostering an environment that attracts investment and ensures economic resilience. So please, give a warm welcome to Ms. Rosana Costa.
Thank you for your presentation, and good morning, everybody. I would greet the authorities present this morning. Of course, I have to give thanks to Invest because of all their efforts for gathering us in this wonderful opportunity of Chile Days for many years. This is my second time here in Chile Day in London. The first time was time of regulation agenda. Of course, nowadays is time of monetary policy. So this meeting takes place in a context where progress has been made in rebuilding inflation in many countries. In the case of Chile, annual inflation fell from 14.1% to 5.3% within a year. Although this is still high, the evolution of the macroeconomic scenario suggests that the convergence of inflation to the central bank's 3% target has been consolidating, a process which is expected to be completed during the second half of 2024. This has allowed the board to adjust the degree of monetary tightness, reducing the monetary policy rate by 175 basis points since July to 9.5%. However, as we emphasized in our monetary policy report published last week, although risk has been balancing out, the process of inflationary convergence is ongoing, and we must remain vigilant to deliver price stability to our people. Recent market development and the August CPI print do not change materially the outlook of our monetary policy report. I will take this opportunity to summarize the view of the central bank on the recent evolution and prospect of inflation in Chile and its macroeconomic drivers, the implication for monetary policy, as well as the main risks and challenges ahead. I will also provide a few preliminary reflections on our experience with navigating the inflation cycle over the past few years. Of course, any conclusions are necessarily tentative, as the process of controlling inflation is still underway. Over the past few years, inflation has increased globally due to local and global factors. In the case of Chile, local components have played a very significant role. At its peak, annual CPI inflation reached more than 14 a year ago, way above our 3% target for the 2-year policy horizon. Core inflation, excluding volatility, also rose to very high level of around 11% during several months. At the central bank, we undertook an aggressive monetary policy tightening, taking the monetary policy rate from 0.5% in July 2021 up to 11.25% in October 2022, and then maintained the rate at that highly restricted level until past July. Over the course of the current year, as tight monetary policy has taken effect, inflation has receded. As the rebalancing of the economy proceeded and convergence of inflation to the target started to firm, the timing was appropriate for starting to ease the policy rate. In August, headline inflation reached, as I have said, 5.3%, and core inflation 7.4% year-on-year, significantly below what we saw a year ago. The decrease has been most pronounced in goods components, including energy, food, and others. Services inflation is also decreasing, but more slowly, especially due to lagged adjustment of regulated tariffs and indexation. The key factor supporting this inflation has been the resolution of macroeconomic imbalances created by massive transfers to households that injected liquidity worth 30% of GDP. This stimulated private consumption in an unprecedented manner, which grew by almost 21% in 2021. Since last year, consumption, particularly in durable goods, has fallen towards sustainable levels. Recent data suggests that the bulk of the adjustment seems to have already occurred. The behavior of consumption has responded to fight inflation conditions in recent quarters, which increased households' financial burden associated with high level of interest rates and inflation. Higher interest rates have also made deposits more attractive, contributing to the recovery of private saving. Along with a significant fiscal consolidation in 2022, the recovery of private saving has helped swing the current account deficit from a peak of 10% of GDP in the third quarter of 2022 to 4.5% in the most recent quarter. Of course, the adjustment of consumption has affected domestic output. Real GDP has contracted for several quarters, mostly due to lower retail activity. However, since much of the adjustment has been concentrated in imported goods, the effect on domestic value added has been much smaller than the fall in consumption. The data for the second quarter shows a year-on-year decline in private consumption of 6.1% in comparison to a fall of 1.1% in GDP, in line with an increase in net exports. The moderation of the business cycle through an adjustment concentrated in imports has so far had a relatively soft effect on the labor market. Annual employment growth has returned to its pre-pandemic average of roughly 2% in recent months. The unemployment rate has fluctuated between 8.5% and 8.8% above last year's figures, at the same time as the recovery of labor force participation has met subdued labor demand. As for wages, these have shown high nominal growth rates influenced by indexation and minimum wage adjustments, but negative real growth rates until recently due to the impact of inflation and declining labor demand in the context of a rebound in labor supply. An additional factor that has contributed to the decline in inflation is the reduction of external cost pressures. Food and fuel prices are lower than last year following the onset of the war in Ukraine. Other imported good prices have also stabilized, and transportation costs have normalized with the resolution of supply bottlenecks that arose after the pandemic. Another significant determinant of lower inflation pressures has been the behavior of the exchange rate in recent quarters. Compared to its highest level in mid-2022, it appreciated in nominal and effective and real effective terms by around 15%. This reduction occurred in a context where local uncertainty has receded from the peaks of recent years. Other information that can be added to this analysis pertains to the dynamic of price adjustment in companies. Price indices constructed from firm-level electronic payments data show that the frequency of price increases for goods has been decreasing, approaching their historical average. Business surveys conducted by the central bank further highlight the importance of the different determinants of inflation described so far. For several months, companies have been reporting a reduction in price pressures associated with the exchange rate and general cost, while the perceived influence of the level of sales has reached neutral terrain. On the other hand, the surveys also reveal an ongoing pressure of labor costs. Part of this pressure is explained by the impact of inflation on wages through indexation. This will continue to affect price inflation in the coming months, especially of services. In this context, inflation expectation has also fallen significantly. Medium-term expectation from surveys of economic analysts and financial traders and those implicit in asset prices have returned to the 3% target during this year, after showing large deviation over 2021 and 2022. Short-term market expectations have also fallen significantly. Surveys of companies for which we have less history have also started to diminish recently. It is important that the process of consolidating inflation convergence continues to be transmitted to the perceptions and decisions of companies and consumers to reduce the second round effect of high inflation expectation. Inflation expectation above the targets, the impact of local risk and uncertainty in local financial markets, and the excess of liquidity in households introduce additional challenges for our recent inflationary process and for monetary policy. Related to this, inflation forecasts and monetary policy decisions had to rely upon uncertain estimation of consumption propensities. Those estimations were revised upwards several times, given higher than expected household consumption, as we had overestimated the propensity of households to save part of those funds and perhaps also their tendency to react to rising interest rates in this highly unusual situation. Overall, different large shocks, both from the demand and supply side, generated heterogeneous responses of monetary policy across the globe. In our case, the perspective of inflation convergence has allowed to initiate an easing cycle. The red line is Chile. The discussion leads me to make a few preliminary reflections based on the episode of the past few years. Of course, any definite conclusion cannot be drawn in a context where the task of controlling inflation continues to be challenging and is not completed. Also, while a lot of things can be learned from this episode, this will continue to depend on how the situation unfolds. A first important insight is that our monetary policy framework based on flexible inflation forecast targeting has allowed us to navigate the inflation cycle well. This framework entails the commitment by the bank to send monetary policy in a way consistent with bringing the forecasted annual inflation rate to 3% within 2 years, while allowing for transitory inflation deviations. It is important to remember that our monetary policy framework relies upon a floating exchange rate. This contributes to mitigate the impact of shocks affecting the economy and facilitates the adjustment of different markets to those shocks. The monetary policy rate is the instrument to bring inflation to the target based on the evaluation of its drivers for the medium-term inflation outlook. Like elsewhere, our policy framework has severely tested over the past few years due to the significant shocks that strain macroeconomic and financial stability. These shocks increased forecasted inflation, prompting the board to initiate a sharp tightening cycle even before current inflation deviated from target. This response, coupled with fiscal consolidation, rebalanced the macroeconomy. In this sense, when facing unprecedented shocks, waiting for more information may be useful, but the benefits need to be balanced against the cost of delaying action. Mistakes can be made, but a rapid response prevents their effects from lingering and affecting credibility. A second idea is that prudent and predictable behavioral of fiscal policy is a key ingredient in facilitating inflation targeting. The rise in inflation during 2021 and 2022 responded largely to the massive transfers. This leaves as a lesson that fiscal support might be focused and avoid adopting a pro-cyclical stance. In fact, the fiscal consolidation that the authority carried out in 2022 was relevant support for reducing inflation. The significant adjustment in public spending and the rejection of additional pension withdrawal projects were key factors in reducing uncertainty and controlling domestic expenditure pressures. In this way, the fiscal anchor, which was weakened after the strong pro-cyclical behavior in 2021, has been favored by the continuous improvement that have been introduced and the commitment of the authority. A third conclusion is that sound analysis, rich data, and robust models are other key ingredients for the successful implementation of inflation forecasting targeting, especially in unforeseen situations. Analytical tools need to be adapted to such situations to ensure an adequate calibration of the monetary policy response. Regarding data, new information tools can be a big help here. The bank has invested to work with large-scale administrative microdata sets from different sources for the better part of a decade. This information is of higher frequency than standard data and forms the base of real-time estimates of activity, demand, and even inflation. The bank has also been building a closer relationship with companies around the country to learn about their perception of the economy and understand their action. In addition, our staff has been implementing a modeling agenda that is constantly being updated in line with development in the literature and policy needs. For instance, to incorporate heterogeneities among economic agents or macrofinancial linkages. The broader lesson is that applied economic research must be the backbone of monetary policy decision and needs to react swiftly to address changing environments. Fortunately, good data and good researchers are mutually reinforcing. Even more reason to place investing in both among the highest priority for central banks. A final insight is that with inflation becoming a paramount concern to the public, a communication strategy that explains to wider audience the need for tight monetary policy can make them unexpected allies in the fight against inflation. People have suffered the cost of inflation and need to know what is happening, why, and what is needed to reduce inflation, and that the process has costs. Importantly, this perception is actionable. A communication plan that consistently target wider audience has contributed to the notion that monetary policy medicine, back testing as it is, beats inflation. This notion is now shared by mainstream economists and the public at large. But this support may prove short-lived if central banks do not deliver in time lower inflation or their actions are not consistent with their words, damaging the legitimacy of monetary policy. This insight should not be lost and speaks more generally about the role of effective communication and speedy action for maintaining de facto central bank independence, written in the law but not in stone. All institutional arrangements need to eventually make sense to people. I will now move on to summarize the inflation outlook from our September monetary policy report. Overall, both the domestic and external scenario are similar to the previous report from June. In the central scenario, total inflation will continue to decrease, and it is expected to close the year at 4.3 annually, converging to 3% in the second half of 2024. This projection weighs lower than expected figures in previous months against the impact of the recent depreciation of the peso and higher external prices for fuels. Recently, inflation recorded for August surprised downwards in relation to expectations. I would like to point out that high-frequency figures are valuable, especially for what they contribute to trends. However, it is not advisable to draw conclusions from each of them. Extracting the trends from the information we receive and how they relate to the general macroeconomic scenario is what we must consider. Also, other things have happened and will happen before the next monetary policy meeting, including the effects that the depreciation of the peso may have on inflation. Therefore, it is premature to talk about a change with respect to the central scenario. Core inflation will close 2023 at 6.3% annually and reach 3% at the beginning of 2025. The decline in the services component will be slow due to the impact of indexation of wages and prices. In the case of goods, beyond the effect of the peso depreciation, their decline will continue to be determined by more moderate demand pressures and relief from external and internal cost factors. This projection assumes that the output gap will continue to close for the remainder of the year, generating the necessary condition for inflation convergence. That is, the economy will no longer operate above its capacity, which has generated pressure on prices and has contributed significantly to fueling the high inflation levels. The evolution of the local economy, in particular the contraction of private consumption, has led to a decline in the output gap after several quarters in positive territory. Towards 2024 and 2025, the gap will be in negative territory, as in our previous forecast, in line with subdued domestic demand. This will allow completing the inflation convergence process within the policy horizon. The GDP growth projection for this year ranges between -0.5% and 0%. This projection takes into account the impact of operational problems that have affected mining production in recent months, with scheduled production increases for 2023 taking effect as the fourth quarter of this year. Non-mining activity, on the other hand, will resume positive quarterly variation starting at the end of this year, gradually approaching growth rates consistent with its potential level. For 2024 and 2025, as in June report, GDP growth ranges of 1.25% to 2.25%, and 2 to 3% are expected for 2025. Regarding monetary policy, the board began reducing the monetary policy rate in July. In the central scenario, the policy rate will follow the path outlined in the July meeting. This means that by the end of the year, the monetary policy rate will stand between 7.75 and 8%. However, the magnitude and timing of the monetary policy reductions process will depend on the evolution of macroeconomic scenario and its implication for the inflation trajectory. Incoming data has not so far altered this strategy, and the main thrust of the message from the September monetary policy report. The set of projections I have just described is what we call the central scenario. It is based on a set of assumptions about the economic environment, agent behavior, and policy orientation. Based on these assumptions, sensitivity exercises can be carried out, which, while keeping GDP growth within the projected ranges, may require somewhat different monetary policy action. These scenarios constitute the monetary policy corridor around the central scenario. The upper bound of the corridor reflects alternative scenarios in which the inflation convergence process is less favorable than expected. The lower bound of the corridor reflects a scenario in which inflation convergence is faster than anticipated. As for more severe risk scenarios, they are mainly associated with the global macrofinancial context. A further deterioration could trigger episodes of high volatility, reduced liquidity, and incentive for capital outflows from emerging economies. In addition to previously identified sources of risks around the US banking system, there are increasing concerns about China, especially related to the evolution of its economy and financial market. If risk scenario materialize, their implication for monetary policy will depend on how the combination and magnitude of these elements affect the outlook for medium-term inflation convergence. Finally, some final remarks. Let me wrap up by emphasizing that undoubtedly the reduction in inflation is good news for our people. However, the task is not yet completed, and we remain vigilant. Our central scenario is considering the convergence of inflation to 3% during the second half of 2024. Recent market development, as the August CPI, do not change materially this outlook. The flexible inflation forecast targeting framework has allowed our small and open economy to navigate well during both fair and foul weather since it was implemented in early 2000s. But the task of returning inflation to the 3% goal is not over yet. Although we have made progress in controlling inflation, we are now facing the challenge of completing inflation convergence. Our country has gone through a long and painful cycle for families and businesses affected by the adverse impact of high inflation. The central bank has had to implement a significant adjustment of monetary policy, which has not been without consequences for the economy, but we are already seeing positive results. Going forward, the calibration of monetary policy will require a delicate balance that avoids greater persistence, but also prevents demand weakness that could lead to excessive deflation. To complete the convergence process, our economy will need to grow below its potential for several quarters. This will allow our country to move towards a scenario where growth capabilities can be deployed adequately without the burden of high inflation and the necessary measures to reduce it. Monetary policy will guide the economy towards trend growth while achieving price stability. But the question arises as to whether this growth is satisfactory and how it can be improved. Developing growth capabilities goes beyond what central banks can accomplish. On various occasions, we highlighted the importance of implementing policies that enhance our economic productivity. For example, education remains a critical factor, particularly in terms of regaining what has been lost in recent years. Improving skills of our workers through effective training is also essential. Additionally, the country can and should leverage its natural advantage, positioning itself favorable for the energy transformation that the planet requires, materials of which you were listening in these 2 days. From the central bank, our contribution is precisely to offer stability through low and stable inflation and suitable financial conditions that are favorable for business development, investment, and growth. As I mentioned, this clears the path for the economy to deploy its capabilities. This is by far our most significant contribution to our country. Thank you very much for this moment.
Well, let's give another round of warm applause to Mrs. Rosana Costa's presentation. Just a logistic issue. There will be no coffee break now because we are running a bit late, so we'll start with the next panel right now in this place. We'll have a very interesting panel. By the way, I'm Hernando Rodriguez, a member of the board of Invest. I forgot that. Today we have a very interesting panel as reflected in its title, Understanding the Power Industry's Conundrum. During the discussion, the speakers will primarily address the present and future of the energy sector in Chile. To do this, we have three very excellent panelists. But before we begin it, and introduce each of the panelists and the moderator, I would like to briefly address the power generation sector in Chile, especially from an historical context, in no more than 2 or 3 minutes. Today, the generation matrix is composed of a very diverse supply. In fact, the installed capacity generation in Chile reaches over 33.5 gigawatts, more than triple the demand on average. The current capacity is made up of 22% hydro, 40% thermal, mainly coal, natural gas, and diesel, 22% solar, and 14% wind. Generation, on the other hand, had a completely different composition in 2022 compared to installed capacity. Has it historically been this way, or have there been significant changes in the supply structure? If we take a look at the last 35 years, we observe significant changes in the industry, starting with the number of participants. In the late 90s, Chile had 4 or 5 significant players in the industry. Today, it is more than 150 companies, from small local developers up to large multinationals, from the 5 continents, deploying all types of technologies from Arica in the north down to Magallanes in the south. Going back to the question about the supply structure, until the late 80s, power generation in Chile was mainly hydro with coal backup. Average demand, on the other hand, reached only 2,000 megawatts in 1990. Today, it is 5 times higher. During 1998, Chile experienced one of the worst droughts in its history, a phenomenon that we have seen practically worsen year after year, with the exception of this year, 2023. Due to the drought and the connection to natural gas from Argentina, several combined cycle power plants based on this fuel started in the late 1990s. However, in 2007, Argentina cut off the gas supply, which combined with the ongoing drought, rising fuel prices, and the 2008 financial crisis had catastrophic effects on the power industry. This led to a very rapid installation of diesel-based generation and the construction of several coal-based power plants. In addition, LNG terminals were built in the north and in the center of Chile in order to supply gas for the combined cycle plants. During this period, especially between 2009 and 2013, the cost of energy in Chile went up to the sky. But from the year 2010 onwards, the boom in renewable energy started to begin. This happened mainly due to the lower development cost of this technology, new bidding terms to supply regulated customers that encourage new players to participate in the sector with relatively cheap options, and the announced decarbonization process. This process, in addition to the commitment made by the country, together the government and the power generation companies, was driven also by the increasing demand from the major free market customers who were demanding more green energy, as we saw yesterday in the mining panel. The strong development of renewable energies, with a lot of generation in the north of the country, has resulted in a major change in the supply structure, with significant challenges, as we will see in the panel discussion. Indeed, some of the challenges we are facing are in regulation, transmission, storage, location, etc. All of this with a huge potential demand due to the eventual development of the green hydrogen industry, as we saw in this morning panel, as well as demand from electric vehicles. These are part of the topics we will address in the following panel. Now, I would like to introduce who are our 3 panelists and the moderator. First, we have the Minister of Energy, Mr. Diego Pardo, who will kick off the panel with a 15-minute presentation. Mr. Pardo is a lawyer from the University of Chile and obtained his master's degree and a PhD from the University of California in Berkeley. Before being appointed minister, Mr. Pardo was executive president of the think tank Espacio Público. Alongside the minister, we have 2 experts and long-time figures in the Chilean energy sector. Mr. Bernardo Larraín, who has dedicated a large part of his career to the sector. Today, Bernardo is the vice president of Colbún and chairman of Pivotes, a public policy think tank. He also was the CEO of Colbún between 2005 and 2012. Bernardo was also chairman of the Industrial Association of Chile, SOFOFA, between 2017 and 2021. We also have Mr. Rafael Mateo, CEO of Acciona Energía, a Spanish energy company with presence in more than 40 countries and one of the largest producers of pure renewable energy in Chile. Rafael is an experienced professional in the renewable energy sector and previously held an important role in Endesa Chile between 2005 and 2009 as managing director of Endesa Generación and CEO of Endesa Chile. So he's very familiar with the sector in Chile. The panel will be moderated by Mr. Randolph Brazier, Global Head of Clean Power Systems, WEC Future Energy Leader and Advisory Board Member from HSBC. And following Mr. Pardo's 15-minute presentation, Rafael and Bernardo will make a 5-minute presentation before going into the Q&A. So please give a warm welcome to the 3 panelists and the moderator.
seating arrangement? How do we sit? Two in the middle. Which in the middle? Yeah. Okay, you in the middle? Yeah.
So welcome everyone. I think we're going to start with a presentation from the Minister.
Sure. Well, hello again. Well, I will sit over here. So I should start saying that where is probably the origin of this conundrum. It's, I would say, twofold. On the one hand, pandemic and what happened in the chains of supply due to pandemic created two things. On the one hand, increases in prices of fossil fuels, and on the other hand, increases in construction costs. The first increase in fossil fuel prices had an impact on the wholesale market of electricity, and what happened with construction costs had an impact in transmission works. Nowadays, especially in works that are not new lines, but improvements of existing lines, we are about 2/3 of delay in those works. So about 2/3 of the works related to improving transmission lines are delayed substantially. And on the other hand, we have this huge increase in prices of fossil fuels. That means that any imbalances that occurred in the wholesale market, that happened for some time before too, but now, because of this price gap, the impact on the income of generating companies was huge. So this is similar to what other countries faced, but it was, I think, in Chile was particular because the way in which our bidding system works. We have long-term contracts, and these long-term contracts, in many cases, were not able to reward adequately this risk that companies were facing. Of course, in electricity sector, as in many other segments of the energy industry, policies are rather stable. They all come from a set of instruments that put an anchor in energy policies and force us to look at the long term. Those set of policies. And the one in particular that we are implementing as a government is what we call the second stage on energy transition. And our initial agenda for a second stage on energy transition. Why calling it a second stage? You can see there in this graph the participation of each technology. What you have in the horizontal axis is the year. What you have in the vertical axis is the share for each technology. And as you can see, well, early in the 20th century, our country was heavily dependent on hydropower. Then substantial droughts came in at the end of the century. And then you can see a significant investment in thermoelectrical generation. That created a big problem. I would say two big problems. One, that is related to the communities in which these facilities are located, because thermoelectrical generation, and particularly coal power plants, create local pollutants, and in those communities, those facilities are hugely resisted. And that's, of course, a political problem. And then it created an exposure to international prices. Chile does not produce coal, does not produce natural gas, does not produce diesel. Then this increase in the generation based on fossil fuels created a huge source of risk for the country. Then about 2015, it started the first stage of this energy transition towards clean energy, based mainly on photovoltaic and windmills. That was quite successful, as you can see in the graph. It was quite successful. But solar power and wind power, they are both variable. And then if we want to take away the thermal generation, especially phase out coal, then we need to create, that's a technological challenge. We need to find ways in which clean energy also provides the flexibility that coal power plants give to the system. And that's the center of this second stage of energy transition. And we need to find ways of investing in storage and concentrated solar power. If you see the area of those things together is similar to the area of coal. So in order to get rid of coal, we need to find ways of investing in storage and CSP. That's the plan, and that's what second stage means. In order to implement this second stage initial agenda, there's a lot of things that are going on based on regulation. These are just executive orders. But the heart of our initial agenda for the second stage is this energy transition bill that you can find 3 time frames. On the short terms, we need to find ways to give relief to some generators that are having financial stress due to the increase in oil prices. And that's what we call a redistribution of congestion rents. That's the short-term measure. In the midterm, we need to increase the investment in storage, and that's why we are pushing a very ambitious agenda to foster investment in storage. And then long-term, from 2030 onwards, then we have new transmission lines coming in, especially Kimal Aguirre, a big HVDC transmission line that should be in operation by 2030. So those 3 sequential timeframes are the ones that we are trying to build with this energy transition bill. I will go quickly on the 2 main pillars of this transmission line, on this transition bill. The first one is congestion rents. The correlation between this increase in oil prices, this created that the congestion rents also increased substantially. And that means that we have a pocket of funds funded by generators that, according to our current rules, are give back to customers. What we are creating is a different set of rules in which, if this is a normal year, such as 2020, then this entire pocket of congestion rents will be given back to customers. But if it is an extraordinary year, then we will do something different, because extraordinary years require extraordinary measures. And then we will split a little bit this fund. Some of it will go to customers, some of it will go to generators. I could go on the specifics of how this redistribution is done, but the essential idea is that by giving some relief to generators, you can avoid 2 things. First, that bankruptcy terminates some quite cheap and efficient contracts that that long-term contracts that enable to supply to customers at a very cheap price, and that has that's a cost of about $1. And then that the market concentrates itself, and that our bidding mechanism is less competitive, and that we estimated that it will have a cost of about $3. Allocating some of these rents to generators, we will believe it will have a cost of about 2 cents of a dollar in the electricity bill. So what you are changing is 2 cents for avoiding something in the realm of $4. In terms of cost-benefit analysis, this is a very sound mechanism. On the second hand, the second pillar of the transition bill is related to storage. What we did, it was to study which substations require more storage, and we find 5 of them that have more potential for storage. And what we are doing is in those 5 substations, what we will do is to create a 2 layers bidding mechanism. On the one hand, we will bid the infrastructure, and we will award the infrastructure to the operator with the lowest bid. And then we will create a bidding for storage services. And then that will be funded by generators. And then just the difference between the cost of the infrastructure and the demand for the service, it will be what is paid by the end consumers. According to our calculations, this difference will end up with a plus or minus of it's less than 1 cent of a dollar, and what you save just in technical minimums and ancillary service and other lateral payments is more than that. So then again, this is a very sound policy in terms of cost benefit analysis, because it reduces lateral payments, it reduces curtailment, and also, very important, it reduces emissions. We estimate that with this set of storage mechanisms in place, we will be able to avoid in the window that goes between 2026, which is when these facilities should be in place, and 2030, that it's where our big transmission line should be in place, we will be able to avoid about 11 million tons of carbon dioxide emissions, which is kind of equivalent to a half of what the electric system produces in 1 year. So again, in terms of cost benefits analysis, especially if you are able to internalize the external cost of emission, this is a very sound technical decision. So, and that's the main goal of our energy transition bill. 2 set of policies, both of them are very sound in terms of cost-benefit analysis. One of them addressed to the short-term financial problems that we see some companies are facing, and the other one more to the mid-term lack of investment in storage. We believe that if we put together both of these policies, then the long term of the electric system, it's much more brighter than without them.
Great.
That's it.
Fantastic. Thank you, Minister. That was really useful.
I was on time.
Yeah. Yeah, really useful introductory scene-setting presentation. So now we're going to move into the panel session. I'm going to give a 2-minute introduction on HSBC and what we're doing, and then we're going to hear from our other 2 guests here, and then we're going to move into the Q&A session. I've got a few questions to start with. I've actually got a lot, but I'll stick it to 1 or 2. And then if we've got time at the end, we can try and take a few from the audience as well. So just on me, I'm Randolph. I'm the head of power systems at HSBC. I sit in our global sustainability team. And my role is to ultimately help the bank and our clients achieve their net zero targets and ambitions. At HSBC, we've set a net zero target for 2050 for all of our financed emissions, and we've also set interim 2030 targets for a range of different sectors. So, for example, power and utilities, we've set a sector target for to help us get to 2050. We very much believe in working with our clients very closely to help them scale up the types of technologies that the Minister was talking about. And to do that, we've committed up to $1 trillion out to 2030 to help our clients with projects, activities, different technologies like the renewable ones we've seen to help them scale up those. And a good example is actually the Kimal Lo Aguirre, excuse my pronunciation, HVDC transmission line, 1,500 kilometres, will be the longest in Chile, one of the longest in Latin America. That's something that we're helping to finance at HSBC. So we're really proud of that, and we want to continue to work with customers to accelerate those sorts of projects. I think the other thing that I learnt is that the Chilean system is not too dissimilar from the British one.
Yep.
So a lot of the demand is in the middle, and then you've got renewables at both ends. It's just flipped here where we've got the wind in the north and the sun in the south, obviously, because we're in different hemispheres. But yeah, so we really want to work with all our clients across the whole value chain and across the world. We see that as leveraging our ecosystem is key to rolling out these projects. So really looking forward to exploring some of these topics on the panel. So now we're going to hear 5-minute introductions from our other two panelists, and then we'll get to the questions. So we're going to start with Bernardo.
Thank you very much, Randolph, and congratulations, Minister, for your presentation. Not only this one, but the previous one regarding green hydrogen, which has a lot to do with the debate on this panel, energy. And it's a pleasure, Rafael, to debate with you and that representing a company like Acciona that is doing great things not only in Chile but also in the world in pushing for renewals in our energy matrix. I would like to basically convey four messages that I think are pertinent to the energy debate, which part of it was expressed by the Minister. What are the issues that are being debated in the energy sector, both in Chile and worldwide? The first is that I would say that this Manichaean energy divide that separates traditional companies against, let's say, renewable companies, basically no longer makes sense at all. So there are a lot of traditional companies, let's say, doing a lot of investments in renewables. Actually, Colbún, the company that I am vice chairman of the board of, is building the largest wind farm, wind project in not only in Chile but in Latam. 800 megawatts of installed capacity, more than $1 billion investment. It equivalates to 50% of the wind power it's being built in Chile today. The 4 of the largest companies in Chile are building probably half of the renewable capacity being built in Chile this year and the next. And the pipelines of projects is also very, very well balanced between, let's say, newcomers and companies that has been in the power sector for a long time. So that divide doesn't make sense. That's a first very important message. And another example, we have 92 clients with renewal certificates. So that means that the source of that power is 100% renewal, and that's been growing very strongly every year. You know, we have contracts, PPA contracts long term with the main mining companies. So we are facilitating the process of decarbonization through, let's say, market decisions. You know, so they call for tenders, and we compete for those tenders, and we win those contracts, and they are 100% renewals. We've been leaders in issuing carbon bonds. We are mitigating a lot of initiatives. The rugby national team in the trip to Europe, it's been mitigated by carbon bonds of Colbún, as well as the Pan American tournament in Chile next month. So what I mean is that a lot of companies, let's say of the old guard, are doing a lot in terms of renewal. And we are in the same boat with newcomers, which are doing also great things in the energy industry in Chile. So that's the first point. And I think that so the debate is not about traditional versus renewals, but the debate is about two ways to see how to basically process and manage risk that are taking place in the transition to a decarbonized economy. And there are two views basically, and that's the second message I want to convey. One view is that risks are better transferred directly through regulatory charges to consumers. And the other view, which is the one I strongly believe, is that the risks are better processed and managed by private enterprises competing in an open market, obviously with a proper regulation. This is a sector that has to be regulated, but still that regulation has to be sensitive to the importance of different companies assuming the risk, managing the risk, and if it goes wrong, well, assume the consequences. If you don't establish that principle, I think it's risky for the long term for the development of the sector. And that's happening in Europe. You know, that graph, the top one, is showing how has changed the spot market price in Europe. So going from, let's say, 50 to 500. And not only that, but also that is affecting prices that customers are paying. So not only you have a very big risk, but that risk is being transferred to customers. So, and that the graph below, the bottom line, which is very stable, is Chile prices. So you see the virtue of having long-term PPAs when power generation companies bear the risks. Obviously, they establish schemes to cover those risks in terms of indexation formulas, in terms of a financial instrument to cover the price risk of natural gas, for instance. You have a very deep financial market if you want to cover that risk, and that's available for everybody. So I would say that the price risk is not easily, but there are a lot of instruments to cover that risk. So it doesn't make sense to transfer that, not to cover it and transfer that directly to customers. So that's my view. So you see that in Europe you have a lot of volatility, and that's been transferred in a very big way to final customers, which is not the case of Chile, which is the bottom line, which is very stable. And so you have some, obviously, price spikes, but nothing to do with Europe. You can see prices moving from, let's say, 100 to 700 euros per megawatt hour. And that's not happening in Chile. So that's why I strongly think that the model that Chile has followed in terms of having long-term PPAs, making power generation companies compete in a market to assume the risk, to bear the risk, to cover them, to manage them, it's a good model. And we shouldn't break that principle when thinking about regulatory evolution going forward. And that's these two views of how to set up a regulatory framework is very pertinent to storage. So storage, you could follow the first route. You can think that storage is part of the transmission network. So basically, companies would invest the capex, they will assume the operating cost, and that's transferred 100% to customers, to consumers. Or you could assume that storage is a service that can be managed by the 150 generation companies that are in Chile now. So look at that number, 150 companies are competing in the generation market today in Chile. So it's a very competitive market. And our view is that storage should be part of that market, and because with storage, you can, let's say, do some price arbitration. If there is zero prices in the north, as it is today, and you have higher prices in the south, well, storage would allow you to deal with that unbalance, and that's something that each player has to basically forecast how much value they can basically capture from storage in the market. But as James said before, storage is not yet cost competitive in terms of market price. So it's not enough to put storage in the market. So maybe, and that's I think is the idea of the changes that will be introduced to the bill, to the transition bill. Only the balance that you don't capture from the market would be charged to the consumers, and that's a good combination to speed up storage installation, but keep this market principle of including storage into the basically competition and market. So that's the second message that I want to convey. The third one is that I think that this is very important. We have very ambitious final goals. So we want to be 100% renewable. We want to have a 100% decarbonized economy in year 2050. But more important, the final goals are the different transitions to get there. So are the partial goals and the capabilities and the sort of inputs that are required to get that goal. So for me, that's very, very important. I think if you see the case of Europe, I'm sure that they are sort of having second thoughts of not investing enough in, let's say, backup natural gas facilities, in not having infrastructure to import natural gas instead of relying 100% on Russia. So a lot of things that were decided, I think, in Europe, maybe they would have decided otherwise is if companies would have bared the risk and cope with them and make solutions for us basically cover those risks. So the volatility you are seeing in Europe is partly because of that, because you could have some alternatives to basically stabilize prices, as we have in Chile. So transitions, partial goals, enabling capabilities are very important. So, and in this sense, I think when I talk about partial goals, I think I'm talking about, let's say, green hydrogen. It's obviously we may think that in year 2040, 2050, Chile may be exporting, I don't know, 20 million tons in terms of ammonia. But it's much more important to put a different goal, which is basically how many projects in the next 2 years are close to investment decisions. So, and that's why I like to be more concrete when you talk about potential of Chile. You may say that we have 50 projects in different phases of development, but that's, when you talk about projects under development, it's a very big basket, you can put anything there. The real thing is how many projects are to be able to have an investment decision in 1 or 2 years. That should be the goal, and not the sort of dreaming about these millions of projects, navigating around, that none of them has even an environmental impact study approved. And according to the previous panel, maybe in year 2024 or 2025, we will have to see the first investment decisions be taken. Otherwise, we will be late. And we still have the whole permitting process, in between. So we have to think about these very concrete, more short-term goals, which obviously have to correlate with a very ambitious long-term road. And the last message I want to convey is that Chile is a great place to invest in renewables, in green hydrogen, and still is. There may be problems today because of the volatility, but the investment being taken by both companies that has been in Chile for a long time and newcomers reflects that it's a very good place to invest. And there is a ranking which is there, just released, that Chile gains some places, so now it's number 14. And to really become the undisputed leader, I think there are some sort of cross-cutting challenges that have to be addressed. And one of those is basically modernizing, expediting the whole permitting process. So if we really want to see final investment decision being taken in 1 or 2 years' time in green hydrogen, in renewable projects, etc., in lithium as well, there's no way around but to basically sort of expedite the permitting process. And because, a few weeks ago, the CEO of Siemens was in Chile, and he told us the following in terms of green hydrogen, for example. You will not be able to compete with the US in terms of subsidies, in terms of tax spend. That's completely impossible. You will be losing your money if you put that, on the table. You will, and where can you compete? You have the natural resources. You have the competitiveness, so green hydrogen produced in Chile will be competitive in Europe, Japan, and the other markets that will be net importers. But you really have to make a difference in the timeline, in the time to FID. And that's, I think, we have to have a big work on that, because we are not there. We're not there. So if you think that none of the green hydrogen projects is still in the system for getting the environmental permit, and if you assume that an environmental permit would take 10 years, as is taken now for desalination plants, well, you will not get there. You will not see final investment decisions taken in year 2025, 2026. So that's completely essential. We have to offer players not subsidies, because the US is many times what we can do. You have to offer things, expedite permitting processes, and once you get the permit, you have to offer them the sort of rule of law that support that permit. And those two things are not there yet in Chile. So those are my 4 messages that I wanted to convey.
No, that's really good. Thanks, Bernardo. I couldn't agree more on the permitting. That's a common theme that we're hearing globally. You know, all countries are struggling with this, not just for the renewable plants, but for the grids as well. And building out the grid is a huge challenge. Okay, so last but not least, let's hear from Rafael.
Thank you, and thank you for the invitation for being here in this Chile Day in London. It's a big pleasure for me to share with the Minister, with my friend and colleague, Bernardo, about the Chilean market and the Chilean situation. Let me briefly introduce Acciona Energía as a company. We are a global company just operating renewables, top 1 green utility in the world today, operating 13 gigawatts, 20 countries, all the clean technologies, wind, solar, biomass, green hydrogen. We are producing today already green hydrogen, supplying 24 terawatt hours, something to feed 30 million people in all the continents, and going to Chile more than 30 years in the country, with more than 6,000 employees, not just in energy, infrastructure, construction, desalinization, water treatment, airport handling, very committed with the country, no doubt, not just the company. Personally, myself, I'm very proud of being Chilean, in all my children. Very committed because we believe in the solidity of the regulatory bodies and the institutional activities in the country. Today, we have invested in the Chilean market 1 billion in renewables. We are not operating just pure renewables. We are carbon neutral 6 years ago, no emission. We are in all the technologies, but our company doesn't have fossil legacy. We are not emitting 1 gram of CO2. Invested in Chile today, 1 billion, and developing more for the future. So let me say that we are also participating in a small, mid-size 10 megawatts electrolysis project in Quintero, another 20 megawatts electrolyzer project in Antofagasta, Mejillones area. And we are part also, the group is part of the Frontera project in Magallanes. It's a huge wind project, 1,000 megawatts in order to produce green hydrogen and ammonia to be exported to Europe. So same in offshore. We are developing some offshore project in Chile. Someone can think, okay, offshore is not the moment, but probably the situation in Chile, I was living in Chile many years, and the situation for the lines is not easy. So probably it's not easy to put the generation close to the consumption. The offshore 10, 15 kilometers from the coast in some areas in the 5th on the 8th region could be easier, high load factor. We are starting with the development on offshore because probably in the life we will see offshore also in the market. But Chile is an island, so there is many islands in the world in terms of energy. Spain is almost an island, and Chile is not having local fossil resources. As an island, is importing all the local resources. And we are living now in the market today a big contradiction. We are importing 20 billions of fossil fuels per year. Let me say better, we are burning 20 billions every year, $55 million each day, burning 20 millions, while at the same time we are not using the full capacity installed in renewables. We are living in a contradiction because we have some disruption or some distortions in the market. Chile today is not an isolated case, same Europe, same Spain, same Germany, in the mistake of depending on a product that Chile doesn't have. It was a mistake in many countries to base the transition in a product that we don't have, that is the natural gas. The case in Chile is the second time. So 20 years ago, we lost all the volume. Today, we increase the cost, but Chile doesn't have gas, and the transition is based in something that we don't have. So we need to do something to avoid or to reduce the dependency. Chile is a very dependent country. To reduce the dependency, there is just one solution: the use of the local energy natural resources, wind, hydro, solar, hydrogen produced with local green solar or wind or hydro. There is no doubt about no plan B, so no more coal in the future, no more gas in the future, except in the gas producers, no more nuclear, so the only solution is more renewables. Renewables are offering stability of prices, affordability of prices, and clean. So the future is renewable. The discussion is when the future comes. It's a local decision, it's a country decision. It depends on when the country likes to be independent. It depends on when the country likes to be clean. But to burn the money that we don't have, losing renewables that are installed, is a crime under the economical or environmental point of view. We are living today in Chile a very extraordinary situation. I fully agree with Bernardo. The companies are managing the risk. I always say that the most difficult risk to manage is the regulatory risk, because all the rest of the market risk, the companies have tools, financial tools, or PPAs, or many kind of procedures to avoid the risk. But we are not in a normal situation in Chile, and let me talk about 4 points that they are making some distortion in the market. First, delay in lines. More than 7 years of delay in lines. I remember, because I was attending many of the meetings in the road shows 10 years ago, where the Chilean government was looking for investors in renewables, almost promising enough capacity of transmission lines, sufficient transmission lines, and even a nodal market, so with no decoupling. Lines are not there, so we are in an extraordinary situation that we need to resolve. As a consequence, we are wasting renewables that are installed, because 40–50% of the energy that could be supplied from the north is not arriving to the consumption. Second point that is important: extraordinary price of fuel, of gas, because the war of Ukraine. The Argentina case 20 years ago was extraordinary in the Regulator Act, and as a consequence, Chile modified very fast the composition of the energy matrix. Now we are in a complicated situation, because Chile is importing. Chile doesn't have power of negotiation in the international gas market, and is suffering the prices that Chile is not. Is a price taker. Let me have a very clear example. Past week in Europe, in an announcement of a failure in a LNG facility in Australia, increased the price in Spain. And Spain never used gas coming from Australia, but is the risk of being in an open international market. And now Chile is suffering a very high price. And this is not a normal situation. This is extraordinary. Third, regulation. There is a case that is not so clear. Renewables are selling the electricity at no price, zero. This is not so clear, because transition means economy, job creation, GDP, but selling at zero is not possible to create jobs. It's not possible to pay salaries. So this is a distortion of the market. Renewables that are making a positive contribution, they are not polluting, they are receiving zero. And fossil plants that they are making a negative contribution in terms of environmental issues, they are receiving the full cost, and the rule globally is who pollute pay, but not the opposites. And let me talk about the fourth distortion, that is dispatching. Maybe we were in the past the coordinator or the national energy coordinator or the operator or the TSO was responsible of the security of dispatching. But now it's not enough. We are living in a trilemma. Trilemma means security, affordability, and clean. So security is not the priority. Probably the priority is a mix in between the three. And for that, we need to modernize the criteria of the dispatching. Nothing is inflexible in the life. Renewables are not inflexible, gas is not inflexible, combined cycle are not inflexible, even nuclear are not inflexible. So we are in an extraordinary situation with some distortion in the market, and as a consequence of the distortion, the regulator needs to act. When the things are not rolling naturally, it's an obligation of the regulator, it's an obligation of the government, Mr. Minister, to act, to change the rules, to promote a new law. So we are supporting the new law because if we are wasting renewables, we need storage. If no one is installing storage, the government needs to promote storage. We as a company, we are operating storage. We are operating the biggest battery in Texas, 200 megawatts. We are close to announce a huge deal here in the UK with batteries, a similar market to the Chilean, renewables in the north, wind, consumption in the center, and we are probably next week announcing with the announcement of huge deal in storage. Storage will be part, it's not still cheap, but it's part of it will be in the future, but it's necessary. Solar without storage is nothing. Wind without the storage is nothing. Storage has existed always. The coal piles in the coal power stations are storage, or the dams are storage. So we are supporting the necessity of installing storage. There are different cases. Regulated tolling, arbitrage, offering ancillary services. It depends on the markets, it depends on the moments. But to start, someone has to push. In our standing, this is the government obligation. This is my intervention by now. Thank you.
Thank you, Rafael. I'm glad you mentioned the energy trilemma. The name of this session is the power system conundrum, and I think it goes back to the energy trilemma, trying to balance cost, emissions, and security and resilience of the grid. I think we heard quite a few challenges there around grid, storage, intermittency, etc. I'll go through each of you. What additional solutions? So we've heard what the minister's told us, what the Chilean government's doing to solve some of these issues. What is the key next step, do you think, to solve some of these challenges? Let's start with the minister.
So my time is not up. Now, a couple of things I would say. The key is to find a way of conserving efficient contracts that are now at risk and investing in more storage. I think those are the two pillars for what we need at this moment. I fully agree with Rafael that we need to reduce dependency on fossil fuels. This is a matter of both sustainability, security, and affordability. Clean energy hits the three buckets of the trilemma, especially in a place like Chile, in which we have abundant natural resources, but we have zero capacity for producing fossil fuels. But I mean, transmission lines and linear infrastructure everywhere takes time. I mean, take a look at the last reports by the US, and they are way behind us even. And transmission lines take a lot of time everywhere. Batteries, on the other hand, are modular equipment that it's easier to deploy. And I agree, we have to do better in terms of permitting, especially non-environmental permitting, but at least in batteries, we are doing it. When we launched a month ago, this package of measures to foster the investment in storage, we took care of the permitting, and the deployment of batteries is not going to need to go through the impact assessment for environmental purposes. And the use of public land will be facilitated, so we are working on all those issues. And that's one of the pillars, right? The fostering investment in storage is a critical. We're also creating special rules for payments on capacity, and we hope that, and we are open to discuss how the tender has to work. But I think we will be able to provide a solution in that regard. On this other pillar of conserving existing supply contracts that are efficient to consumers, I think in that I think we have a difference, because I don't think this is a matter of principles. Of course, it has some principles on it. I mean, we can talk a lot about whether this is a symmetrical risk or an asymmetrical risk, and what are the better framework for providing this. I mean, our solution is based on these principles of standard market design that were developed in the US. You can try to build something different from other sources of regulation, but the relevant question here is a very simple one. We have these windfall profits, if you want to put it that way, these congestion rents that are extraordinary, that are of about, in last year, of about $200 million. So you have those congestion rents that are extraordinary. And you have basically two possibilities. You can give it entirely back to consumers, or you can split it between consumers and generators. And the answer to that question is not a matter of principles, it's a matter of evidence. And what we need to see is the cost-benefit analysis behind it. We believe that if you give it entirely to consumers, then you will have some contracts that will be terminated by bankruptcy, and you will have concentration in future bids. And if you add up all those costs, it's about 10 to 15 times more than the cost of the measure. I will be happy to see what your numbers are, because this is not a discussion of principles, this is a discussion of evidence. And if you come up with a cost-benefit analysis that says that this set of policies are more costly than beneficial, then I will happy to change of course and find something different. But we did this cost-benefit analysis internally in the ministry, but we also, with external consultant, we find the finest academic experts in order to make this calculation, and we are really sure that that the cost-benefit analysis is properly done. So again, you can try to say that this is a matter of principles, and of course it has some ideology on it, but ultimately it's a very simple question. What do you do with this windfall congestion rents? How do you divide it between customers and generators, and what's the most beneficial way of going about that issue? And I think our solution and the cost-benefit analysis that we made is laying there, and to me is very compelling, at least.
Bernardo.
Well, I think the first thing we have to do is to basically produce a correct diagnosis. If you don't have a good diagnosis, you will not have good solutions. And let's briefly, let me briefly touch on that. First of all, Ukraine affects fuel prices, as they were affected at the end of the 2000s, where basically I was the CEO of CorD1, and we have to absorb that price volatility. and we have to negotiate with clients, but there was no value transfer from the clients to the generators. The generators absorb the risk and absorb the consequences of the decision they've taken. And that's when I talk about principle, principle is not a synonym of ideology. The market design has to be set based on principles,
Yeah, right.
and that's not ideology. That's nothing to do with principles. So first of all, that the price volatility, it's been always there due to grain, due to whatever. The price of gas has been higher than the consequence what was the price because of Ukraine, and everybody is dealing with that. You cannot argue that was an exogenous risk that has to be, that comes from the ceiling, you know, from the I don't know where, exogenous and unpredictable. So always has been the case, and that's why when we went into contract with final clients, we obviously set up indexation formulas. We go to the financial markets to cover those risks. Who can say that you cannot cover the risk of price volatility of fuels? It's the deepest market in the world, you know. So that's not the case. So volatility of prices of fuels, I wouldn't say it's an exogenous risk. Secondly, renewals are selling at zero. That's not correct, Rafael. Renewals are selling at the price you enter into with clients. The zero cost is the marginal spot price. And in any market, when you have a situation of excess supply, no transmission, no capacity to export, let's say, and no capacity to store, the price will be zero. That's economy 1.0. Regardless of if the regulatory framework for marginal spot market, it's cost audited or auctions. We are very happy to enter into that discussion. But you build your projects based on PPAs with final clients, and that's the way you recover your investment. Now, if a company sets up a capacity in one region and enter into contracts in another region, that's a risk that the company is taking. We are not doing that, for instance. Every time we go into a contract with BHP, with Collahuasi, we develop a portfolio of projects around that area, because everybody knows, it's always been known, as you said, Minister, that transmission is lagging behind generation. You cannot assume that this highway is going to be there. Transmission, it doesn't appear, you know, from one day to another. Everybody knows when, from year 2015, that we will not have enough transmission to evacuate the millions of megawatts installed in the north. So if that signal was there, you know, in all the companies, we would have basically installed renewable capacity all around the country, not concentrated in one area of the country. So that's another risk that some companies took, and some other companies didn't take. So there are 150 companies in Chile competing, and only 3 are arguing that there are not many the ones that receive the monies that will be transferred from clients to these few companies. Only the companies that has a deficit will receive that transfer. In Colbún, we don't have an interest on this discussion, because we will not be benefit nor damage on this discussion about transferring money from the clients to the generation companies. But the companies that will receive this money is only those that has a deficit. Isn't that a right signal? That companies that have a deficit, you know, will receive, you know, a transfer from the clients? This is not a windfall profit. This is monies that are, by law, that correspond to consumers. It's not that this windfall is being captured by some generators. It's 100% being received by consumers. If you were sort of discussing this regulatory framework ex ante, very happy to enter into that discussion. Maybe it's good to have a mix of some, let's say, risk being transferred directly to customers and some other being absorbed by generators. But this is not the case. You are doing a change afterwards. The risks were taken. So some companies didn't do well, and then you are presenting a bill to transfer some monies from clients. By law, that those monies correspond to clients, those windfall. And why? Because clients are financing the whole transmission system. If there is money in the transmission business, it has to be captured by clients, by consumers who are financing 100% of transmission systems. So that's why we feel that, again, it's very important for the long term And actually the model of Chile to have PPAs, which are long terms, which basically allow you to basically invest in projects, to do project financing, it's been basically a reference to the changes in the regulatory framework in Spain, in Brazil. And now here we are saying it's not so good, because maybe it's better to basically quantify the risk and transfer directly to clients. And not always, only when the crisis materialize. Is that a good principle for regulatory design? I think not. I think I'm very clear on this. And that's why we approach the debate from that perspective, saying its system is more healthy. You can basically have the illusion, let's say, of having very low prices, because all the risks were transferred to the clients directly. But you talk to clients, they are paying now $30 in charges last year, now it's 22. From this, what they call the systemic cost. All these things that are transferred directly to final customers. So they are getting close to the amount they're paying for generation. And that's why they are becoming worried. So Chile it's very important for our mining industry, from our lithium industry, to be very competitive. It's not free, that they are sort of paying charges of $30 of what they call this big bag of, let's say, systemic cost. Because all those are things which are transferring directly to customers. And therefore, that's why I think it's very important to put this place. Maybe this redirection of these incomes that basically belong to clients, it's not a big thing. Maybe it's transitory, but watch out, So it's very important that companies absorb the risk, process the risk, manage the risk. If they think that the price of gas is going to go up for whatever reason, it's gone up many times in the last 20 years for different reasons, at levels higher than what we're seeing today. That's why you have, financial instrument, and every year in Colbún, we set a policy to cover those price volatility. It's not always perfect. We absorb losses. But in general, in the long run, it makes sense, So that's the kind of thing. I don't want the market for generation to become a fully regulated infrastructure market. That's not good for clients. It's better, for the market in Chile. And you see the result, basically. You see the volatility in Europe and the prices that final clients are paying. It's higher than Chile. Why we want to go in that direction, where many charges are charged directly to clients. And we have a higher share of renewals in Chile. And we've done so, with no subsidies, with no special regulation, with no transferring of risk from generators to consumers once the risk is realized. If you want to make a design ex ante to redistribute risk, that's a great discussion, but not after the risk realized. I think that's not a good principle.
Rafael, I'm not sure where we're at with time, but just quickly.
I don't know exactly how to start, but
I see you furiously writing notes there. What's your view on this risk sharing?
No, that's clear. Its company is responsible of the risk. So we are a public company listed in the Madrid Stock Exchange.
And the risk of a delay in transmission network.
Yeah, but
would you not say that it was foreseen 10 years ago?
This is a political issue. I'm going to go to this point. In terms of managing the risk, all the serious companies, have their own system of managing the risk. So we have a very sophisticated tool. We are a company with rating. The rating agencies are asking every month about our contracts. And we have a policy, 80-20, 80-75-25 of our P50 production needs to be contracted globally. It depends. We are managing the different markets, the different countries, but we have internal rules in order to take our risk under control. And talking about competitiveness, the most expensive price today in the Chilean market are the contracts that are linked to the fossil fuels, because the contracts that are linked to renewables or to the CPI are in the lower prices. But we are in an extraordinary situation that is not new. Probably it was a lack of responsibility of the last governments to maintain the open access, don't having transmission. Maybe in order to analyze the curtailment, some kind of first in, first out procedures should be operating. But the situation was, okay, come on, investors, because this is the most attractive market to invest in renewables, but there is no transmission. This is not responsibility of the companies. This is the responsibility of the country, of the government, of the different governments. This is one, the past, and the past. Because there were lying or not promising exactly the correct solution. And today, because you agree, when Acciona came to the Chilean market to invest in renewables, 10 years ago, we were the first company going into the market. There was enough transmission for us and for the rest. There are no transmission for the last one, for the company that is coming yesterday. But at the end, when we are talking about curtailment, the curtailment is for everybody. So we need to clarify, because we are suffering an extraordinary situation and we need extraordinary solution. The law is not flexible. It's not written in stone. Let me talk about the congestion rents. Belongs to the consumer the normal level of congestion rents. But with the congestion rents are extraordinary, for the consumer it's a windfall profit.
And the consumers?
For the consumer it's a windfall profit.
Which is a good thing.
I don't know. Because for someone could be a windfall loss. So we need to consider that the consumers are receiving a windfall profit, extraordinary, and some companies in the market are having a windfall losses. And let me say about the investment destination. So in the last 2 years, there was a banker here, in the last 2 years, no project financing in Chile. Yesterday, IHS published a list of the loss of attractiveness to invest in renewable. Brazil, Chile, Turkey was losing attractiveness because today there is no more room to invest in renewables unless more batteries or unless more lines. We have seen, the minister explained before, that the Quimal-Lo Aguirre line is coming in 30x. So no more investment without lines, no more investment with batteries. Line is not coming suddenly. So the solution is to invest in batteries. But this debate is not in between traditional or modern. There is a debate, even it's not a debate in between technologies. This is the classical debate. Companies that needs to protect the legacy assets as much as they can, or companies without legacy assets that are coming into the market. So I was past week in Madrid in the panel with all the oil and gas company. All of them, oil and gas company, were green. Okay, the transition, but please, very slow transition. So at the end, depends of what the market decide. Independency and climate change. It's a local decision. We are just investors. The capital is going into the best market to invest. We are investing here in UK, in Australia, in India, in South Africa, even in Spain. In Chile, we have projects in the future, but the capital is looking for the best attractive market. So today, without more lines, without more storage, it's very difficult to invest in renewables.
Can I just
I want to say something too. I think it's my turn.
Only one thing. I don't know any
renewables.
I don't know any country in the world that could say that in the next 5 years would not have any natural gas in their matrix. Even Europe is considering natural gas as a renewable source of power because they acknowledge, ideally you would have natural gas locally, but Chile could not basically opt out tomorrow from natural gas. So I can take myself a picture saying I close all the natural gas facilities, but somebody else is going to operate them because they are needed in the system. And that's a clear, and no country has managed, unless I am wrong, to not have natural gas in the next 5 years.
Before moving to our next topic, I would like to say couple of things because I didn't want to interrupt you when you were talking. The first thing is that this fund for congestion rents does not come from customers. It comes from generators. It is funded by imbalances between injection and withdrawals.
Who is receiving them now by the law?
Okay, I didn't interrupt you.
No, just I'm asking you.
Yeah, can I go with it?
Sure.
Okay, so the money comes from generators. So the question is where to allocate it. And we have a current rule. What we are saying is that our current rule works good for ordinary years. You have some extraordinary years in which we should have a different rule. And this different rule, that is, and this is the second thing I want to correct you, this is not retroactive, this is for the future, in which we have to discuss for extraordinary years what to do with this amount of money. We believe that it is better to split it between customers and companies for a very simple reason. Because in the short term, you have a bigger probability of keeping efficient and cost-efficient contracts. And in the long term, because you will have a healthier industrial composition, more heterogeneous. And maybe in this we don't agree, because from what I see from you is that you believe that this is a wrong signal, that we have that will create some harm in the long term on the composition of the industry. Great, but you have to measure it, because we measure it, and after we measure it, we compare the cost and benefit, and we believe that it's 10 times more the benefits than the costs. If you can come out with a number that says that industrial organization will be worse, and the costs are larger than the benefits, then happy to discuss it. But then again, it's not a matter of abstract principles. It's a matter of very concrete numbers.
Yeah. Well, I think we're going to have to. I think it's lunchtime. I mean, this was a great debate. I mean, these are really challenging questions, but getting this right is essential, because it's the electricity system that's going to do most of the heavy lifting for reducing emissions. And I think something we can all agree on is that any sort of policy or regulatory design needs to be based on taking a systems approach, thinking about the whole energy system from end to end, generation, transmission and distribution, and demand. We didn't even really touch on demand and how actually that can play a big role as well. But thank you very much, everyone. It was a fantastic debate. We could be here for hours.
Well, thank you all for your presence, and a special thank to our distinguished panelists and the moderator. Let's give them another round of warm applause. Now we'll have a networking lunch, and we'll ask you to be here back at 3 p.m. for the political session, where we have two senators from Chile, Senator Paulina Bodanovich and Senator Rodrigo Galilea. So see you here back at 3.